Hey, welcome back to this channel, Life Insurance Made Simple. Today we talk about the different types of life insurances. Now, in the interest of time, we'll just cover 4 major types of life insurance policies that we'll group under 2 categories. Let's go. The 2 categories of life insurance policies that we'll review today are perm for permanent and term for temporary. So let's start with the permanent policies. So these policies are designed to last for your entire lifetime, whether you live up to 100 years old or more, while temporary policies are designed to only last for a specified duration. So now let's try to break this down. So let's start with term policies. The first one that we will look at is what we call group life. Okay, so group life policies are the type of policy that you get because you belong to a group. For instance, you start working for a company. Now, these policies are pretty easy to get because in general, the life insurance company is not going to look into your health history or your lifestyle, seeing if you do skydiving or you are involved in dangerous activities. Now, don't just rest assured saying, hey, you know what, I have a life insurance contract with my company, with my employer. Because once you leave that company, you will not be able to carry that coverage with you. Some group life policies will allow you to convert to an individual policy before leaving your company. So that way you will be able to keep that coverage, but you have to keep that in mind. Now, the next type of term policy that we will see is what I will call term. Now, there are multiple variations of term policies. And let's start with the first one that I will call the regular term. So this type of policies are designed to last usually for 5, 10, 15, 20, maybe 25 or 30 years. So usually it goes at most to 30 years. It's more like use it or lose it. So if you don't die or you don't pass away within that term period, after that term period expires, you lose your coverage. And on top of that, these are the cheapest policies that you will get on the market. But once your term expires, if you try to renew, it's going to become a lot more expensive, as we will see in future videos. The second category is what I will call the term with living benefit. So if you remember in the previous episode, we talked about what is a living benefit. In short, it's basically a feature that allows you to access part of your death benefit while you're still alive. The last type of policies is what I will call increasing term. Instead of being covered only for 30 years, you'll be able to go beyond 30 years. But here's the catch. Every single year, the premiums will increase. So for instance, if you get an increase in term when you're still 35 years old, you'll be able to get covered up to 80 years old, for instance, depending on the company you work with. But keep in mind that premiums are going to increase every year. So make sure to look at your contract and make sure that you're fine with the projections that you see. I will even argue that probably if you start at 35 years old, by the time you get to 60, 65, you will not want to keep that policy, because the premiums could quickly become very expensive to the extent that you will not be able to maintain that coverage. The next type of policy that we'll talk about now fall into the category of permanent. And the first one we will review here is Index Universal Life, or IUL. The specificity of IUL is that IUL is flexible when it comes to premium payment. You can skip payment for a long period of time. You can also increase how much you want to pay. So basically what happens is that the insurance company is going to provide you a guideline. Say, hey, you know what? This is the target premium. We suggest that you pay this amount. But you can pay more than that, a little bit less than that, or spend a good deal of time without paying premiums. Because life happens, sometimes you can be in a tough spot and you need some time before going back to your regular payment. But you have to be mindful. Okay, don't just take it for granted and stop paying, because in that situation you might lose your coverage. Now, the second and last major category or type of policy that we'll talk about when it comes to permanent policy is whole life. So with the regular whole life, what happens is, right from the start, you know the premium, and the premium is going to be fixed for the entire lifetime of the policy. The insurance company is going to give you a projection of your cash accumulation. So it's going to be a guaranteed cash accumulation. So you will know in 10 years from now, right from the top, how much cash you'll have in that policy. Now, this is not necessarily the most used policy when it comes to cash accumulation and flexibility. Now, you have a different type of whole life that is called participating. So in participating whole life, at the end of the year, you get a dividend. And that dividend is basically a return of premium. So what happens? At the beginning of the year, the insurance company is going to make a budget, and they will account for operational expenses, salaries of employees. They will estimate how much death benefit they will have to pay, and so on. At the end of the year, after they fulfill all their obligations, all the money that is left from that initial budget is now shared to the policy owners in the form of dividend. So once you receive that dividend, you can decide to cash it out, or you can use it as premium. And then this is a powerful vehicle to increase the cash accumulation. The last type of whole life that I want to talk about here is what we call final expense. The goal here is not necessarily to have a consistent death benefit that will allow you to transfer wealth to the next generation. These type of policies are designed more for taking care of the final bills. If you, for instance, if you get to a certain age where you cannot be covered anymore, the death benefit will usually be between 20 to 50,000, or maybe 60,000, or a little bit more. But they are really designed for taking care of the final bills and for concierge planning. So with this, I want to stop this recording here. I hope that you found value in this episode. If you did, please make sure to like and subscribe. And as always, I will always suggest that you meet with professionals, because not all life insurance contracts are equal. It depends on the type of policy and the company that you work with. If you want to talk with me, just look at the description. I've provided a link to my calendar. Please book an appointment. It's a free consultation of 30 minutes. We can go over your case and whatever you want to discuss about, and I hope that I will provide help to you. So in between now and my next video, please stay safe and see you around. Bye bye.